Hello, this is David from Kepler Trust Intelligence. In today's Trust in Focus video, we'll have a look at Ashoka WhiteOak Emerging Markets, which has the ticker AWEM. AWEM was launched in May 2023 and is advised by WhiteOak Capital Partners, the same firm that advises the highly successful Ashoka India Equity, or AIE. WhiteOak was founded in 2017 by Prashant Khemka, the lead manager of AWEM. Prashant brings a wealth of experience from his 17-year tenure at Goldman Sachs Asset Management and is supported by two investment directors, Fadrique Balmaceda and Lim Wen Long, who both have over a decade of investment experience each. The wider investment team is well resourced and is among the largest in the emerging markets sector, with around 44 members spread across Singapore, India, Spain and Mauritius. AWEM provides access to a multi-cap portfolio of emerging market equities with a focus on small and mid-cap opportunities. The trust has two primary objectives, which are maximising alpha through stock selection and minimising volatility and drawdowns. The starting point is to strip out businesses with poor governance, high debt levels and those lacking a sustainable competitive advantage. The team then concentrates on identifying high quality or great businesses that can deliver superior returns. Prashant and his team shun simpler valuation metrics like price to book and price to earnings ratios, preferring to use a bespoke and unique analytical framework called OpcoFinco. This framework was developed by Prashant during his tenure at Goldman Sachs, and it focuses on companies' ability to generate true cash flow. I won't go into too many more details on the OpcoFinco framework, but it's definitely worth understanding it, so do check out AWEM's fact sheet, which has a much more detailed explanation. Now moving on to the portfolio, you can see that AWEM has decent positions in TSMC and Samsung Electronics, which make up just over 10% of the portfolio. It's worth noting here that the trust can invest in companies listed on stock markets in developed countries, which generate a majority of their profits and revenues from emerging economies. And you can see two here in Prosus, which is listed in the Netherlands, and Richemont, which is listed in Switzerland. We also mentioned earlier that AWEM has a focus on small and mid caps, which you can see here. The portfolio currently has 36.4% in small and mid caps, which is this under this SMID banner. Now, while not a large part of the portfolio, clearly, it has 64.5%, so 2/3 are in large caps, but its 36.4% weight is more than twice that of the MSCI Emerging Market Index. Now, over time, Prashant expects the split between large cap stocks and mid cap stocks to be around 50-50. So you can probably expect to see that SMID exposure kind of move up towards that 50% and large caps fall a little bit. Notably, the team's ability to successfully identify and access anchor IPO and pre-IPO opportunities has already contributed significantly to AWEM's outperformance. Now, geographically, we will look at the top of this chart and focus on China plus Hong Kong and India first off. Now, AWEM is overweight India, which is perhaps unsurprising considering WhiteOak's primary focus has been on that particular market so far, so that accounts for the 8.1% active overweight there. Now, one thing worth pointing out on the line above where China and Hong Kong is concerned is that while AWEM appears to have a big underweight towards these listed stock markets, that is in fact much smaller when you consider AWEM's underlying economic exposure to China and Hong Kong. Once you take that into consideration, it is only 1% underweight. As we mentioned earlier, AWEM was launched about 18 months ago, so there's not a wealth of performance data to go on, but the early signs have been encouraging. AWEM's NAV total return since inception has been 20.6% and its share price total return is 20%. This compares favourably to the iShares MSCI Emerging Markets ETF, which is up about 17.2%, and the MSCI Emerging Markets Index's 16.4% gain. Indeed, despite the relatively short track record, AWEM has shown the ability to outperform in both rising and falling markets, only underperforming its benchmark in one quarter to the end of May 2024, and that was only 38 basis points of underperformance. You can find a more in-depth assessment of performance in the latest note on the KTI website.
At the time of filming, AWEM trades on a 1% premium. By comparison, the weighted average discount for the sector is 13.3% according to JP Morgan Cazenove. The board acknowledges the importance of shareholders being able to sell at a price that doesn't disadvantage them, so the premium or discount to NAV at which the trust trades is continuously monitored. There is an annual redemption facility in place which should allay any liquidity concerns that investors have. The board has also established a share issuance program to grow the company, and it has permission to buy back shares as well. AWEM shares AIE's unique charging structure. There's no fixed annual fee, and WhiteOak Capital only receives a performance fee if AWEM demonstrates relative outperformance versus its MSCI Emerging Markets Index benchmark. The managers will receive 30% of any excess NAV returns over the benchmark, calculated over discrete 3-year periods. This fee is capped at 12% of the time-weighted average adjusted net assets during the performance period. The fee is paid in shares, 50% of which are subject to a 3-year lock-in period. AWEM's latest ongoing charges figure is 1.94% excluding the performance fee. The higher OCF is because of the higher fixed costs that small funds have. The board expects the OCF to fall as the trust gets bigger. It's unlikely that AWEM will pay dividends under normal circumstances, as its primary aim is to deliver attractive capital growth over the long term. If the underlying portfolio does generate a small amount of income, this will firstly be used to offset AWEM's operational costs. The board has stated that it may declare an annual dividend sometime in the future if necessary to maintain its investment trust status. AWEM can borrow up to 20% of NAV, though it currently has no arranged facility and no gearing has been employed since inception. You can find more on the AWEM website or by checking out the latest research note on the KTI website. Thanks for watching today, and we hope to see you again soon.